You're watching The Money Show. I'm Kavita Thapliyal, and this is a show where we answer all your investment-specific queries. And today we'll be focusing on women queries. That's right, it's Women's Wednesday on The Money Show. And today, to answer all of your queries, I'm joined by Nisreen Mamaji. Nisreen, hi, evening, and welcome to the show. A very special edition of The Money Show where we'll be focusing on women financial planning and their portfolio investment strategies. And a lot of women have sent across their queries, and even you will figure this out when you see the questions. They look much more planned in advance than the usual queries that we get from our viewers. But having said that, let's begin with our first question, and this comes from Nidhi Giri, and she says that she's from Noida, and she has a 5 months baby. So congratulations over there, Nidhi. And yes, you want to start investing for the better future of your baby, and you want to start an SIP. That's what she says, Nisreen. She can invest for almost 18 to 20 years. 1.5 CR is what is a requirement. And she has Nippon India Multi-Cap 2,500 she's been investing, and she's working, and she's planning to step it up, as in her investments also, by 10%. So for 1.5 CR in 18 to 20 years, what should be the corpus what should be the investment strategy, the funds, and the investment amount as well? One important addition, Nisreen, since I think she's talking about her child's better future, and if at all education is the goal, we might also want to help them have a investment strategy which helps them avoid all the currency fluctuation that we've been witnessing. Rupee, we already see, has been depreciating to very crucial levels. So just keeping that in mind, if at all child education is the goal, and if at all the child wants to go abroad, it's better if we have an insulated strategy already in place.
Sure. So congratulations, Nidhi, on having your little one and also planning so beautifully for her future. And as Kavita has rightly said, you have a couple of choices for investment. So Nippon India Multi-Cap is a very good fund. But since you might plan that the child, might want to go abroad for future education goals, you could also consider, any of the US funds, basically because most of, it's better to invest in a dollar currency. So what happens is that you invest into a feeder fund, and that feeder fund will invest into a dollar fund. And when you redeem, it comes back to you in INR, but at the dollar rate of, 20 years later. So if, we are expecting that the rupee will depreciate in the next 15 to 20 years, then, you can also take an insulated strategy like Kavita mentioned and do like a 50-50 corpus, whereby you include one in INR and one in any of the US funds. So right now you're investing in Nippon India Multi-Cap 2,500 rupees. If you continue that for 20 years, and we expect 12% compounded annualized growth rate, so you will have in your target corpus 50 lakhs, around 50 lakhs. But since you want about 1.5 crore, I would recommend that you do a step-up SIP of 22%. That means in the first year, you're investing 2,500 rupees SIP. In the next year, you increase it by another 500 to 600 rupees, and so on and so forth, in order for you to meet your goals, at the end of the 20-year period. Alternatively, if it is possible for you, you can go in for 7,500 SIP for the entire duration of 20 years. But that, I think, would be slightly difficult. So I would recommend that, every year you increase your SIP, do a step up of 22%. And so then also you can match your goal of 1.5 crore in about 20 years. In case you're going for option 2, where you're investing 7,500 rupees, you can include 2,500 rupees Nippon India Multi-Cap, say about 3,000 rupees in an international fund, and in the balance, you can go for a Motilal Oswal Mid-Cap Fund. So these are the choices for you: 3,000 in international fund, 2,500 in Nippon India Multi-Cap, and 2,000 rupees in Motilal Oswal Mid-Cap. So that's option 2 of 7,500 rupees. But I think it's better that you just go in for 2,500 with a 22% step up, just divided between one US fund and Nippon India Multi-Cap. You can continue that. So all the very best for your future, and I hope your little one can definitely achieve her dreams and ambitions.
All right, so
Kavita.
that's the plan for you, Nidhi, and all you have to do is just add few more funds. And yes, you're already planning to step it up by 10% as and when you can do increase that investment amount so that you can achieve more than your financial goal that you've put up for yourself. But then let's move on. Anu Singh is our next viewer, and she's 38 years old. SIP amount is 28,000 per month, Nisreen. She's got 9 funds in her portfolio: Flexi Cap and Large and Mid Cap of HDFC Mutual Fund, Large Cap of ICICI Pru, Large and Mid Cap Motilal Oswal, Small Cap Nippon India, Multi Cap again of Nippon India, Infrastructure Fund of ICICI. Flexi Cap of Parag Parekh, and Gold ETF of Tata. Question is whether the fund selection is good. Is there any changes that you would want to recommend? She also wants to add a PSU fund, either ICICI or SBI, 3,000 per month she wants to add. And she wants to continue doing this SIP for almost 12 to 15 years, and PF balance is almost 15 lakhs. And next 10 to 15 years, she requires 4 to 5 CR for her house goal, child marriage, and child education as well. So she wants to know how much she needs to step it up in terms of her investment. And okay, so since last 1 year, she has started this investment and she wants to add more funds and also wants to do a step up. So yeah, we can consolidate the portfolio, and maybe she needs to step up her investments. And also, I don't have clarity on what exact goal she wants, what exact money. So these are all important goals. I don't want to. I'm not sure if she really wants to buy a house within that time frame, 12 to 15 years, because house, child marriage, child education, if it's all of this coming together, the requirement may go beyond 4 to 5 crores. That's what she has written. So yeah, what's your recommendation, Nisreen?
Sure. So, hi, Anna, Anu, thanks for writing in. So basically, we will look at the entire corpus in 10 to 15 years. She's mentioned that. So since we don't have the timeline, we just look at a 15-year time period. So first, let's review the portfolio. There is slight kind of duplication between HDFC Flexi Cap, Parag Parekh Flexi. Then there's also large and mid where you have HDFC and, Motilal, and you have ICICI large cap. So the thing is that there's over diversification, without any extra benefits. Because what happens is that all these, you might have more funds, like you have 9 funds, but typically they're investing in the same stocks. So I will suggest to you like a slightly more tighter portfolio where you have it, only about 6 to 7 funds, which will make it easy for you to track also. So what I would recommend is you can go in for the flexi cap, continue with Parag Parekh Flexi to the tune of 6,000 rupees. Large and mid cap would be Motilal Oswal, 5,000 rupees. Multi cap, you can go for Nippon India multi cap, 4,000 rupees. Small cap, also Nippon India small cap to the extent of 5,000 rupees. Thematic, you should also have a little bit, so you can go for ICICI Pru Infrastructure Fund for 3,000 rupees. Hedging instrument can be gold, which can be Tata Gold ETF for 3,000 rupees. And a large cap can be ICICI Pru large cap to the extent of 2,000 rupees only. So this is the new asset allocation, that is suggested for you. Also, your query is between ICICI Opportunities and the SBI PSU fund. So there I would recommend that you continue with, ICICI India Opportunity, which is the additional fund that you want to do. It's better diversified and it's, business cycle based rather than the PSU fund, which will be highly volatile and also, dependent on government policies. So go in for the ICICI India Opportunities, which is the 2 options that you have. And now you asked for, what your target corpus is between 4 to 5 crores in about 10 to 15 years. So we'll take the longer time period, obviously, because, your higher the tenure, higher the possibility of you, reaching your target corpus by that time. So in the mutual funds, 28,000 rupees you're investing, and you will be able to achieve about 2.4 crores in 15 years, provided that you do a 10% annual step up and you achieve a compounded annualized growth rate of 12%. As far as the EPF goes, you have 15 lakhs in your corpus and you're investing 30,000 a month there. So at about 8.5% return, current is about 8.25, you can expect 1.5 crore. So between the two and a half, approximately 2.4 and 1.4 in the EPF, you can have a corpus of about 4 crores approximately at the end of 15 years. But obviously, you'd be advised to review, every 3 years and make sure that you are on target, because you have a corpus of 4 to 5 crores that you want to achieve. So about 4 crores, about 4 crores is possible, uh, provided that we calculate at 12% compounded annualized growth rate for the mutual funds. So happy investing, and I hope that you're able to do your review and stay on track for your investments.
All right, that's the recommendation for you, Anu. And with that, it's a wrap on the Money Show as well. Thank you so much for watching. And Nisreen, thank you so much for being a part of this very special women's episode, Women's Wednesday episode today. Thank you so much.
Thank you.